business and all of Wall Street marking September 21st on their calendars. That's when the Federal Reserve is making its next decision on interest rates. Some at the Fed hinting a hike could be coming this month, and stocks could be in for a shock. They've been rocking so far this year, so are we in for a September surprise? Let's ask Danielle DiMartino Booth, Scott Chelledy, and Jonas Max Ferris. Scott, to you first. Do they pull the trigger in September?
Well, you know what? I hate to tell you this, but it just doesn't matter. I mean, at the end of the day, Dagan, what we just heard those two arguing about is we don't have an interest rate problem in this country. We've got a growth problem, and that problem is taxation and regulation. So go ahead. Raise them a quarter if you want to raise them a quarter. But if anybody can seriously tell you that raising interest rates by 0.25% is going to have the captains of industry run out and retool their places where they do their business or buy more businesses, that's crazy. Raising interest rates isn't going to help anything. So I say this. Let's do taxes. Let's do regulation. Interest rates don't mean anything right now because, as we've seen, it just doesn't work. We've got full employment or close to full employment, and we can only get a 1% GDP. The engine is broken.
Danielle, you don't think that the Fed will pull the trigger because it's political and it won't do anything to hurt Hillary Clinton?
I absolutely don't think that they'll do. The markets are at such an overvalued state that you'd have to go back to partying like it's 1999. To find a stock market and a bond market more overvalued than what they are today. And I just don't think the Fed has it in them to try and upset that apple cart in front of November the 8th. No way, no how. They've just become too political to do it. They behave more like an arm of the Democratic Party than an independent group of unelected officials who are supposed to safeguard the economy.
Well, they met, the Federal Reserve officials, Jonas, met with this group, this liberal group, Fed Up, when they ought to be speaking to all the savers in this country who have totally gotten the short end of the stick with them keeping interest rates at 0%.
Well, they didn't get the short end of the stick if they own stocks. Those have more than doubled. But, you know, look, rates are low globally. They don't need to go higher. There's hardly any inflation. That said, it would be kind of cool if the Fed did raise rates a little bit before the election for purely psychological reasons, which some of the other guests are kind of saying. It basically says we're not a political organization. We'll raise rates on election day if we feel that's what the economy requires and that's what inflation needs us to do to fight it. It also will say that we are more concerned about inflation than job numbers, which is a mistake they made way back in the 60s. It'd clear that. It also says to everybody the economy doesn't need training wheels. This is a strong economy. It also gives them a way to lower rates if we have another recession, which is kind of the fear now. Do we go to negative rates like they have abroad? Again, we don't need higher rates, but psychologically it would be comforting to many people, a lot of fear mongers about the Fed if we went slightly higher.
Scott, do you think it would be comforting to the market, particularly ahead of the election?
No, I don't, number one. And number two is that it's kind of like driving your car down the road and your engine starts on fire. We pull over and we check the air in the tires. That's what's happening with the Fed. That's what's happening to our economy. We're not addressing the real issue of growth. We continue to address the issue of pump things up until we're worried about taking the value out of them. That's the real problem. So he's right. I don't think they can raise interest rates because they're going to have this. All the moms and pops that have been out that risk curve that have been 90% invested in stocks are going to get hurt. So we're in a problem, and they're stuck, and there's no way out.
Danielle, I don't think anybody at the Fed would know an air pressure gauge if it hit them in the face, but final word to you.
No, I truly don't. And, you know, if you look back at history, and the only history that we can look back to is back to 1990 in terms of Fed statements. If you look back to 1990, the Fed has raised interest rates one time, exactly one time, within 2 months of an election, and that was when the economy was booming. I just don't see it happening.
Thank you all. Danielle, Scott, and Jonas Max Ferris.